You've probably never heard of HR 5404. It sounds like just another boring piece of legislation, right? But what if I told you it's being used as a key to completely rewrite the rules of finance? Today, we're going to break down how this obscure standard is redefining the very value of money.
But let me start with a question for you. What if all the money you've carefully saved up, sitting there in your bank account, was actually worth a tiny, tiny fraction of what you think? I'm talking 97% less. It's a shocking thought, I know, but it's the core idea we're diving into.
Just look at this comparison. It's pretty wild. This suggests that $1 million in fiat savings, the regular cash in your bank that's only backed by a government promise, could have the real-world buying power of only about $30,000. Now, this isn't just some random number pulled out of thin air. It comes from a very specific and very powerful legal interpretation of what value actually is. So where on earth does that 97% job come from? Well, it's all rooted in HR 5404. You can think of this regulation as a measuring stick. It defines the US dollar against a fixed value of gold. And when you do that, wow, it puts a spotlight on just how much purchasing power our everyday money has lost to inflation over the years. It's the legal baseline that makes this whole devaluation crystal clear. Okay, so if HR 5404 shines a light on this massive problem, what's the solution? Well, this is where a new kind of digital asset comes into play, the gold back. And get this, it comes with this almost unbelievable valuation of $9,280. Let's dig into how that's even possible. A gold-backed token, or GLDB, is what's called a real-world asset, an RWA, and that term is absolutely crucial. It means this isn't just some random digital code floating in the ether. Each and every token is a direct digital claim, like a title or a deed, to a real physical piece of gold that's sitting in a super secure vault. It's the ultimate bridge between the digital and the physical. And the level of precision here is everything. Every single gold-backed token is backed by exactly 1/1000th of an ounce of pure 24-karat gold. It's this direct, verifiable link that gives the whole system its foundation. No guesswork involved. But here is where your brain might start to melt a little. Through a special framework called the gold-back-to-trust ratio, that tiny, tiny speck of gold is given a fixed trust-backed value of $9,280. Now, hold on. This is not the market price of gold you see on the news. Think of it more like a legally anchored internal exchange rate. It's a predefined value used only within this financial ecosystem to give the asset incredible leverage. And of course, you're probably wondering, how do we know the gold is actually there? Well, to make sure there's total trust in the system, everything is obsessively documented and verified. As this quote says, it's meticulous. The whole process is checked by independent auditors, we're talking big names like Ernst & Young and Deloitte, to make sure that physical gold is always accounted for. So, having a token with a super high valuation is interesting, for sure, but what can you actually do with it? Well, this is where we see its true power in the real world, using these digital gold tokens to challenge and even erase traditional debt. One of the most talked about applications is something called the Mortgage Elimination Program. The whole strategy is to use that gold standard definition from HR 5404 to argue that standard mortgage loans, which are based in that constantly devaluing fiat currency, are actually full of legal holes that can be challenged. Here's how the process generally works, broken down into 4 steps. First, an AI dives into all the legal paperwork on the property, looking for liens and analyzing the mortgage. Second, it uses that HR 5404 gold standard as a legal lens to pinpoint those vulnerabilities in the loan. Third, and this is the high-tech part, a flash loan provides instant liquidity to make the transaction happen in a split second. And finally, the settlement is paid using those high-value gold-backed tokens. Their massive $9,280 valuation provides the financial horsepower needed to completely zero out the debt, instantly. Okay, I know what you're thinking right now. This sounds way too good to be true. Why in the world would traditional banks ever agree to something that seems designed to beat them at their own game? Well, the answer is actually not what you'd expect. It's because this entire ecosystem wasn't built to fight the system. It was built from day one to work with the system. The whole thing was designed from the ground up to be institution-ready and strictly regulated. Compliance wasn't an afterthought. It was the very first thought. And the secret sauce, technically speaking, is a blockchain standard called ERC 3643.
The easiest way to think about this is like a VIP pass for digital money. It creates permissioned tokens, which means only users who have passed all the strict identity checks, anti-money laundering, know your customer, are even allowed to hold or trade them. For a bank's risk department, this is a dream come true. It literally builds all the rules right into the asset itself.
And on top of that, it's built to plug right into the existing financial grid. It speaks the language of the big established players that run global finance. We're talking about the DTC for official tracking numbers, the DTCC for clearing all the transactions, and Euroclear for international investments. It's not trying to replace them, it's designed to work with them.
And it doesn't stop there. The framework is carefully designed to check all the right boxes with major global banking rules, like the Dodd-Frank Act and Basel III. By getting ahead of the curve and meeting all these standards, it takes away that regulatory fear that usually keeps the big banks from trying anything new.
So we've seen how it's built to be accepted by the big banks, but what's really fascinating is that we're also seeing acceptance growing at the government level. There's a real, tangible, legislative trend of states all across the U.S. literally paving a golden pathway for this new kind of finance.
I mean, just look at this. This isn't just a one-off thing. You've got states like Utah, Wyoming, Texas, and now Florida, all passing what are called sound money laws. They're officially recognizing gold and silver as legal tender again, they're getting rid of taxes on them, and they're even building the regulatory tracks for digital transactions backed by precious metals. This is a movement.
Let's zoom in on Florida's HB 999, which kicks in 2026, because this is a really big deal. It sets up a super strict rule book for the companies, the custodians who hold these digital gold assets. They have to be licensed, they have to be insured, and they're legally required to act in their customers' best interest, all under government supervision. And here's the kicker. The law explicitly allows the Florida state government to start accepting electronic payments in gold and silver. They are building the perfect on-ramp for these exact kinds of systems.
So when you step back and look at the whole picture, you've got the technology, you've got the institutional buy-in, and now you've got state laws all coming together around gold, one of the oldest forms of money on Earth. As all these lines between the physical, the legal, and the digital start to blur, you really have to wonder, are we watching the birth of a brand new hybrid financial system? One that has the stability of a real asset with the incredible speed of the digital world. It's a pretty powerful question to think about.